with the average of last 14 days price. Okay, that's why if you look at the chart here, okay, if you look at the RSI, and it says here, you see, it's for 14. They always use period lah, because what happened is if you're using weekly, that means it's 14 weeks lah. But what we are doing is daily lah, so it's 14 days lah. Okay, then you know the limit is 30/70. That's a default lah. Usually that's what people do lah. Okay, so 14 days average, and we compare the price today, and then we compute the ratio, and the ratio will be here lah. Okay, 70/30. So that's how they compute. So going back to our question, basically that's what it means here. RS, okay, is calculated as a ratio of stock price compared to the average price. We are not comparing to the market index or industry index, but you know, some other indicator use that, but the one that I showed you just now, basically compared to the average price of the stock itself over some previous period, which is 14 days. Okay. So it is also known as a momentum indicator. Momentum indicator, that means to indicate how fast the price is going. Okay, whether there's still got momentum or not, still got strength or not. So it is a momentum indicator used to identify the underlying strength of the stock price movement. Okay, it focuses on identifying whether a stock has been overbought or oversold. Okay, so just edit this thing. Okay. So overbought means going up too high already, must come down. Oversold means it has to, in other words, the U-turn is coming. U-turn is coming. Right. What else? Okay. It is used as a warning sign of potential trend reversal. Trend reversal, which is the U-turn in price movement. Okay, so that's basically what we are doing. Okay, the next question is basically looking at the candlestick, like what we saw just now. Okay, so the candlestick, wait, let me just make it smaller. Okay, all right. So if you look at here, there are 5 candles here. So Monday, the highest is 9. Okay, Monday, the highest is 9. Lowest is 8. Then, okay, because it's a black candle is equivalent to the red candle. So software, okay, in the software, let me just put it here. Okay, right. Charting software. Red, it's equal to black candle, and then green, it's equal to so-called the white candle, equal to the white candle. Okay, so you just pay attention, take notes on that. Okay, so all right, so if it's black candle, that means the opening is on the top part. It's on the top part. Okay, which is 850. And the closing will be 825. Then on Tuesday, okay, the highest, you see there's no head on this candle. That means the highest is actually the opening also. So highest and the opening, 850. Okay, closing is 825, but the lowest is 8. So it's stated here. For Wednesday, the highest it's 9. Okay, lowest was 850, and the lowest was actually the opening. Okay, opening, all right, 850, and the lowest is also 850. Closing at 875 875, because it's a white candle, so it close will be at the top part of the candle body. Then on Thursday, highest is very easy, 9. Lowest is 8. So 9 and 8. Okay. Because it's a white candle, so opening it's 825, closing it's 850. Okay. Right. Friday, you can see is just one dash. In other words, opening and closing same price lah. Okay, at 850. And then the highest was 9, lowest was 8. So it's pretty easy. Okay. The next part of the question, they ask you to calculate the 3-day moving average. Remember just now I show you all the moving average line. So how is the line constructed is using the average. So just now I show you what 30 days moving average, 90 days moving average. So, but luckily nowadays you don't have to calculate yourself lah. But in this case here, what we are doing is just to so-called for familiarity purposes, ask you to calculate the 3-day moving average by using the closing price. Okay. So as you can see, just like your assignment lah. Okay, the first one, because you want to calculate the first one, you cannot calculate start on Monday, right? You need 3 days, right? Okay. So Wednesday, you can only start calculating the average on Wednesday because you have to use 3-day average, right? So Wednesday, Tuesday, and Monday. So Wednesday, Tuesday, and Monday, 825, 825, 875. Okay, so first 2 days, we don't have information. Starting from Wednesday, okay, the closing price will be Monday, Tuesday, Wednesday. Okay, that's 3 add together, 825, 825, 875, divided by 3. So you will get 8.417. Okay. Thursday, because you only need 3 days average. So Thursday, Wednesday, and Tuesday. So ignore the Monday lah. So 825 plus 875 plus 850 divided by 3. So you get 850. Okay. Friday, Thursday, and Wednesday. So ignore Monday and Tuesday lah. So 875 plus 850 plus 850, you divide by 3, you get 858. So that's how you calculate the moving average. So it's pretty easy calculations, but if you want to calculate every day and then after that plot it on the chart, that will be a lot of so-called trouble lah. Very troublesome lah in doing that. So, but luckily nowadays, the software just draw it for you lah. So that will make things much easier. Okay. All right. Next. Okay. So next, they ask you to distinguish a bar chart and a point and figure chart. I already told you what's a bar chart at the very beginning. Okay. Show that to you. Okay. So bar chart has 4 pieces of information: high, low, opening, closing. Short bar indicates little price movement. Okay. So if okay, so if you look at here, if I change it to bar charts, okay, bar charts, all right, let me just zoom in. So you can see that, in certain day, on certain day, okay, for example, on this particular day, this bar is very long, okay. Why is the bar that long? Because the highest and the lowest, there's a big difference there. That's why you have a so-called long bar chart. However, on other day, okay, for example, like this particular date here, okay, it's very short. So because the highest and the lowest, remember every bar, right? They give you 4 pieces of information. Okay, the opening, the closing, right? It's opening here, there's a closing here. So that's the highest here, and then the lowest here. So if the bar is very long, that means on that particular day, the price range is very big, okay, very volatile. But if it's very small, for example, like this one here, okay, let's say for like this one here, this one here, this one here, these are all, for that particular day, nothing much was happening lah. So that's all. I mean, the price did not move that much from the highest to the lowest. Okay. So so that's the thing about the uh, bar chart. Point and figure charts is something that nobody use anymore lah, put it that way. Okay, point and figure charts, what they do, it's this. Point and figure charts, let me just add one here. Okay, so what they are basically doing, it's something like this. Okay, let's say this is uh let's put it 1 ringgit, okay, or 100 lah, 100. This is 110, this is 120, okay, this is 130. Okay, so let's say, and then 90, 80. Let's say today's price is 100. Okay, so what you do is, okay, you put a zero there, you put a zero there. Okay, so what will happen is you just wait for the price to see, okay, whether it will be going to uh, uh, uh okay, so this is the price here. Okay, all right, so 100, so put a zero there. So you just wait lah for the next few days. Okay, it has to go up or down, right? So if it finally, if it reaches 110, you put a zero there as well. Okay, then you wait, wait for it to go, whether it will go up to 120 or you go down to 110. So if it goes down to if it from 110, if it the next level will be either up to 120 or down to 100. If it goes down to 100, right, you say okay, then you put a cross there. And then after that, the next thing, maybe, okay, after the cross for like 3, okay, go down to 80, then it turn back to 190, okay, right. So what people analyzing is like, okay, every time, like after 2-0, okay, after 2 up lah, 2 up, there will be 3 down, okay, 3 up, maybe after 3 up, it will be 3 down. So they just look at this and see whether there is any pattern that they can see. So this is called a point and figure chart, which is actually basically nobody using. Okay, right. So if you look at the answer here, okay, point and figure chart is drawn on the graph paper with a vertical axis measuring discrete increment in price. That means my example is every 10, represented by the box size lah. Starting from the opening price, the analyst will fill the box in the first column, okay, and then when the price has changed by at least the box size in my case is every 10 lah, okay, one size is 10 ma, okay, so you 80 to 90 is one box, 10, the difference is 10, 90 you add 10, 100, so each box is equal to 10 in this case here, okay, and then it decrease of one box. If the price continue in the same direction in the next period, then continue, then so you're just analyzing the box basically. All right, like I mentioned, there are a couple of questions here regarding behavioral finance. Behavioral finance, right, is basically trying to incorporate psychology into finance. Because what happened is people find out, sometimes our theory, right, all this finance theory, we assume that people are smart. We assume that people are smart, not stupid. Okay, so they will look for like highest return with the lowest risk, which is what we have been studying. Okay, but in real life, some people don't behave that way. So psychologists came around and say, okay, other than looking at the theory, you must also look at the psychology of the investors. So the study of that is known as behavioral finance. So briefly explain what behavioral finance is and why is it important. Okay, so there are two questions here, two parts questions there. So the first part is to basically, so basically when you have two parts question, answer in two different paragraphs lah. Okay, all right. So first paragraph, I said behavioral finance is an interdisciplinary. That means combining two so-called two discipline. One is finance, the other one is psychology. That combines finance and psychology to study how human emotions, bias, okay, influence the financial decisions making. It explores the deviations from rationality. Okay, that means it try to investigate why people behave irrationally. In other words, behave in a weird manner, in a so-called stupid way. And when it comes to financial decisions. So it's to understand the underlying psychological factors that driving these deviations. Okay. So in short, what they are trying to say is that behavioral finance is a study that combines psychology and finance, trying to study why people, when they make their financial decisions, they may behave not according to logic. Okay. All right. So why is it important? Uh, this is important because it challenges the traditional assumptions. Because all this theory that we study, DDM lah, PE lah, PBP, whatever lah, okay, it we assume people are smart when they make decisions. Okay, so this study, right, we don't assume that way. We don't assume that way. And we are trying to figure out why people behave in such illogical way. So by understanding this, investors and policymakers can develop more effective strategies to manage risk, enhance return, and improve market efficiency. In other words, if we can study this and understand how people behave, then we can make more money lah. Okay, all right. In other words, we can have developed strategies that so-called enhance our return. And behavioral finance basically bridge the gap between the theory and practice by offering practical insights into so-called financial decisions making in the real world. So that's the importance of why we study behavioral finance. Okay. So the last question mentions some part of the behavioral finance. Okay. For example, overconfidence. So these questions, right, be careful, because they tell you to explain what is the meaning of that and also what is a possible consequence. That means if that thing exists, right, what will be the possible thing that can happen in the market? Okay, number one, overconfidence. I think most people can understand what's the meaning of confidence. Overconfidence means investors, right? They believe they are smarter than other people. Okay, simple as that. So they believe they can outperform the market. In other words, they believe they can just beat the index, okay? And they overestimate their own ability and they underestimate the risk. So they will be looking at some of the past history. Then they will be telling you, you see, last week I do this, I make money. The previous week I did this, I make money. They've forgotten there's this thing called luck. Maybe they were just lucky. Okay, unless they can keep doing it for 50 times, 100 times, and without making any mistakes. But people who are overconfident, normally, after one or two times, they already think that, wow, they are the best in the world. So that's the problem with that. So if investors have this thing, what will happen? The consequence is they will overtrade. They may do a lot of buying and selling because they believe that their technique is correct. So at the end, they will lose money. Okay? And they may not diversify. From day one, we already told you one of the main thing about investing is diversify. Okay? So they will probably not diversify because what happened is say, oh, I use this technique and I make money. So now I all in. All in, use this technique, all in. No diversification. They will underestimate the risk and overestimate their returns. So those are the possible consequences. Representativeness bias. It's basically they believe that history will repeat itself. Okay? So they will make decisions based on their past experience, the patterns, or the stereotypes, rather than considering all available information. They believe that history will repeat itself. Okay? They believe that history will repeat. So, if that is the case, what will happen? There will be mispricing of assets. In other words, the stock's price, right, may go a bit haywire. Okay? And then they may miss opportunities. In other words, when the share price is really cheap, they may not buy it. Okay? They believe that, the last time it got so cheap, it get cheaper. Okay? Another thing is herding behavior. Herding behavior means they will just follow everybody else. Okay? People buy, they will buy. People sell, they will sell. That's called herding behavior. It's just following. Okay. Okay. Next one. Herding. Herding refers to a tendency of investors to follow actions and behavior of others rather than making their own decisions. Basically, what is happening is we call it FOMO, fear of missing out. They are just afraid that when everybody makes money, they don't make money. So if everybody buying, they will buy. So this is exactly what happened during the COVID when everybody was buying glove stocks, and most people who bought glove stocks have no idea why they were buying. Okay, just because everybody else is buying and the stock keep going up. So herding and representativeness. So those are things that exist in the market. Okay. So if herding behavior appear in the market, what will happen? Market bubbles. That means the share price will keep going up and up and up until one fine day, the whole thing will just crash, just like glove stocks during the pandemic. Okay, and it will increase the market volatility, and then again, investors will fail to diversify. So those are the possible consequences. So that's basically the questions on this tutorial. So like I said, most of the time, right, when it comes to technical analysis, they basically asking you these few basic questions only lah. Okay. All right. Now let's look at the assignment. Wait, where is the assignment? Let me just find my coursework. Okay. Right. This one. Okay. Okay. Any specific questions? You may switch on the mic and ask, or you can just type in the chat box if you have any questions related to the assignments that is not in the FAQ. I'm waiting for you to ask questions. The due date is this coming Friday. This Friday, 11:59 p.m. Okay.
Hello, teacher.
Yes.
Okay. I need to conclude about the last question. So for now, I'm using the price to earning ratio.
Okay.
So the first thing first, I need to determine what are the dividend payout ratio, right?
Not necessary.
Or not necessary.
Not
Okay.
necessary. That is one way lah. One way of approach. Yes.
Okay. Because you need to, if in order for you to determine P to E, you need to know what is the dividend payout ratio, right?
That is one of the method. Yeah.
Okay. And then for the growth, right, teacher? So I'm using the simple growth rate. So while I'm using the simple growth rate, once I get the amount, so I need to determine the industry life cycle of the company, is it?
Yes and no. Okay. It by right it's you determine the life cycle first, then only you determine the growth rate. Okay. But the thing is,
Oh.
how did you get the growth rate?
So the
You say you
growth rate,
use a simple growth rate, right?
yeah.
How did you calculate the simple growth rate?
So the simple growth rate, the calculation will be 1 minus payout ratio times the return on equity. So the whole figures, I go to use the annual report one. The annual report,
Okay.
so I use the 2024 annual report figures, then I only to get the growth rate.
But that is the growth rate only for 1 year, what? Correct or not?
Yeah.
Yeah. Okay. So the important thing is the growth rate, right? If you look at it, it's the growth rate for a foreseeable future. You get what I
Okay.
mean? It's not just 1 year. You cannot base on only 1 year and draw a conclusion.
Understood.
Okay. So any question there?
So for the competitive company, right? If I need to determine the growth rate, I need to determine 3 years
Not
to see
necessary. You see, the thing is, we are trying to see what is the reasonable growth rate for this company for a foreseeable future. Foreseeable future, is like 5 years, 10 years time lah. Okay, on average lah. Because growth rate cannot be the same every year. One cannot. There's no way.
All right, understood.
Okay, so we have to agak-agak lah. All right, we have to estimate what should be a average growth rate. So you cannot say, oh, last year is 10%. Average must be 10% every year for the next 10 years. Cannot, correct or not? Maybe last year was very good, or maybe last year was extremely bad.
Okay.
Okay.
All right, that's all for me.
All right. Okay, wait. I have some question that is typed in there. Let me just get the chat box out. Wait. Okay. Okay. Is it using the average beta of 10 years to calculate intrinsic value? There are many ways of calculating the intrinsic value. This is not the only way. Okay? But if you want to use that, you go ahead. You just have to tell me why you want to use the average beta of the 10 years to calculate the intrinsic value. By the way, there's only one beta. Okay? It's not like every year got one beta one. Just use one beta only. Your whole assignment, at the end, that company has only one beta. Okay? All right. Next one. For part one interpretation of data, do we need to interpret both portfolio and stock cap M? Portfolio and stock cap M. Cap M. You can compare. Okay. Cap M basically at the end is the required rate of return. Okay. So required rate of return for the stocks, basically you have two different stocks. Portfolio, you just take the average. Okay. Let's say the first one, is 10%, second one is 20%, 50, 50, 15%. Okay. So that one, simple thing lah, nothing much to interpret lah as far as portfolio is concerned. More important is on the individual stocks lah. Okay. I'm not sure how to determine how to earn more than required return. How to earn more than required return? What do you mean how to earn more?
I think that was something that I picked up. I heard during the tutorial for part one, like the explanation during the tutorial. Because is it for part one we just have to interpret like the CAPM?
Mm-hmm.
Oh, okay.
Okay.
All right then.
All right. Okay, next one. For the company analysis, should I include all 7 factors? No. Don't wait don't get mistaken. The 7 factor in the FAQ, these are just examples. Okay? A lot of time examples don't mean anything on. It's just for you to get a concept, get an idea only. The important thing is to include those things that is relevant to your company. So, for example, if I give you an example, I say, okay, one of the factor could be means maybe, maybe it could be in inventory turnover. But the company you choose don't have inventory. Service industry where got inventory, so you go and include that for what? Correct or not? So you must look at a company that you are analyzing and see what are the important factors. That's the answer to your question. Okay? All right. Can you clarify below? Because based on the demonstration you have done in the class, only have one standard deviation where I'm not sure. Monthly standard deviation. Okay? Standard deviation based on yearly return. Okay. What did the question ask you? Let's check and see. Okay. All right. Mana sudah pergi. Download the, okay, for each stocks, calculate the average. Calculate the average yearly rate of return, standard deviation. That means the standard deviation will be based on yearly, based on yearly standard deviation, yearly standard deviation. Okay. You have the average yearly return, average yearly return. You got how many years? Who asked this question? Can you just switch on the mic? Whoever asked this question. Otherwise, Chan Hui Du. Can you on the mic? Oh, not here already. Yes.
So teacher, for the you just now say the yearly standard deviation, so I need to calculate another monthly standard deviation or not?
No lah, the question didn't ask what.
So no need to calculate for the monthly standard deviation and monthly return, only for the yearly only lah.
Refer back to the question lah.
So the question only asked for the yearly then
yeah lor.
Because last time you say to me
no, because it's monthly stock price okay, together for the last 10 years. For each stocks, calculate the average yearly. But because the thing is, a lot of people, they calculate the monthly first, then from monthly they convert to yearly lah. So it depends on how you do that lah.
So also the same formula, but only just calculate the
yearly one,
average yearly only lah.
Oh,
so okay.
Okay. All right.
Thanks, Dr. Tiang. Sorry, just now my mic was not working.
Okay, no problem. Okay, wait, let me just go back to here. Next question. For part 3 of the assignment, calculating intrinsic value, should we value 2 stocks or just 1? 2 stocks, because you're supposed to do 2 stocks. Okay, Gan Yi Hang, got it? So two stocks, two stocks. For the dividend growth rate, since we computed beta using 10 years data, should we also use 10 years dividend data, or it's just a 5 years window? Dividend growth rate. Dividend growth rate is only one growth rate lah. So if you want to calculate the growth rate, right? The growth rate, the important thing about the growth rate is what is going to be the growth rate going forward. Going forward. You see, here. Now it's 2025. Okay? All right. So 2026, 2027. Okay? Dot. Let's say until 2030 lah, let's say. Okay? All right. This is just example lah. Okay. The growth rate is this. This is the growth rate. Okay? All right. Average growth. So this, what we want is to find the average growth for this period. For this period. Okay? This is what we want. The average growth for this period. Okay? So if we want to do the average growth for this period, if we want to do the average growth for this period, whether you use from 2020 to 2025, okay, or let's say year 20 or year 2000 to 2025, does it make a difference? Because what we are trying to do is the forecast. We are trying to do a forecast. Okay? What is going to be the average growth for the next few years? Somebody just now say, oh, I calculate the growth based on 1 year. Okay, so let's say 1 year is 10%. Does it mean this 10% is going to be average for the next every year? Not necessary, ma. Okay, all right, not necessary. If you use 2000 to 2025, let's say the average growth is 15. Does it mean this 15 is going to apply every year? Not necessary also. Okay, that's why the important thing is to look at the industry life cycle. Okay, in your industry life cycle, okay, right, you should know which part of the cycle it is. Based on that, okay, supported with this, okay, it can be from 2000 ka, from 2020 ka, oh, okay, 2020, sorry, okay, yeah, or it can be also 1 year, can be anything. But the important thing is you have to synchronize these two, your industry life cycle, together with what you calculated, come up with a number for the average growth that can be applied for the next so-called foreseeable future lah. Not necessarily until 2030. It's called foreseeable future. That's what we are trying to do. Okay.
But teacher, let's say my industry, my company is shakedown phase already, which means that the growth is became very less, ma.
Yeah.
So later I found out that my growth is negative. Then how?
Try not to lah. Okay.
Try not to. Okay,
Yeah,
okay.
try not to lah. That's all I can say lah. Because foreseeable future, if it become negative doesn't mean that okay next year become negative already. If next year become negative, you better change the company. Okay, All right. If it's like, oh, can tahan another 5 years or maybe 10 years later die already lah. Okay. So at least you can average. Okay. All right. Because it's an average, ma. Okay. So it's an average. Then you say, okay, average will be lower lah, slightly lower lor.
Okay, understood.
Okay. All right. Next question. For Porter 5 forces, should I combine both companies or compare their strategies? Porter's 5 forces, should I combine both companies? If you want to do that, better don't. Better don't combine because each company is different. Unless you are doing the Porter 5 forces, depends on where you want to do it. You can do it at the industry level. If you do it at the industry level, then only do one. No? If you do it at the company level, you have to do two. Okay. Next one. If one of the company last dividend entitlement date was 2015, the other company to should we use 2015 data also include the EPS PE ratio? No. Okay. If you want to compare, 2015 is too long ago lah. Okay. So dividend entitlement date is 2015. Don't compare the dividend already law. Okay, don't compare. Include the EPS. You compare the EPS can use the latest law. The PE ratios can, but don't compare the dividend because the dividend is too long ago already. For part 3, the beta is taking portfolio beta or individual stock beta. I think I already mentioned that. Okay. Which week is our group presentation? Call has found a week. Yeah, good question there. Okay, I'm not sure I told all of you that our presentation will be done through video. That means you pre-record the video, and then we will play back in class. Okay, doesn't mean that you don't have to come for the presentation. But yes, you are right. The week 11 Friday is holiday. So for those of you who are on that, let me try to give you more information by this week's class. I will try to arrange the replacement class and see whether we still do it on week 11 or we can do it in week 12. Okay. So I will let you all know more detail during the class this week. Okay. All right. For part 2, top-down approach, may I ask how can I determine which cycle of my industry? That one you go and determine. Okay. Let's refer back to the industry analysis tutorial questions and the answer. Okay. Those things are in that. Because I got construct GDP table, can I just compare with the crude oil price in the past 10 years so I know my companies? I can't give you that kind of okay. You can do that, but that doesn't mean that will be the answer. That is one of the possible thing that you can do. There are many other things that you can also do. All right. Okay, mic not working, don't worry. Can I use monthly standard deviation and then square root 12 can be my annual? Can. This is how you convert lah. Can. No problem. Okay, that is Bing Zhong Cheng Bing Zhong. I don't know lah. This surname don't know where they put on. Okay. Then Deng Hui Zin, sir, for part 3 for stock 1 can use DDM and stock 2 use PE or must be consistent. Wait, let me think. Wait. You can use 2 different methods for 2 different stocks. Can. Okay, no problem. Deng Hui Xin. Pang Wei House, for the formula, should I use the average total asset or total asset? Because my company one is using total asset, which provided annual report for the company 2. I confused which should I use. Use both company also use the same. You can use total assets at the end of the year, or you can use average assets. Up to you. Just be consistent. Okay. So how if the growth rate is higher than the required rate of return? Change. Okay. Tang Wei Tat, you can always modify the number one. You can always modify the number. Okay. I think I've mentioned that in class before. These numbers are not dead one. This is not maths class. This number is very much depending on the input.
So, sir, so for the growth rate, right, so we can just try to predict what will be the average dividend growth rate in the future, right? So we don't necessarily need to follow the exactly in the formula.
Exactly.
Currently, the formula is the answer.
Oh.
My formula is higher than the required return that I get.
Yes. Okay.
Right. Thank you, sir.
Formula is for exam. Okay. All right. But of course, you can verify with the formula, and if the formula give you some, growth rate higher than the required rate of return, tak boleh pakai. Change the input lah. Change the input.
Change the input.
Yeah, change the input to the formula.
Because the day you mentioned in the class, like we also can get the average historical company average historical growth rate.
Yeah.
But
Yes.
Just from my research, the average growth rate for companies that are chosen, which is Bonia, they have a negative dividend growth rate.
Yeah, then you can't no? You cannot use no?
So I just choose whatever there is.
Choose, maybe the industry.
Oh, okay.
Okay. Right.
And then for the KMs, which is when we calculate the required rate of returns, is the implied market risk premium equals to the market risk premium?
Yeah.
Yes, sir. Okay. All right. Thank you, sir.
For interpretation, can I compare the CAPM with the average return this year to determine company performance? Or is that for part 3 apply to? For interpretation, can I compare the CAPM with the average return this year to determine company performance? I don't really understand your question.
Sorry, I think I meant like cause earlier I wanted to see like determine if the stock is earning more than the required return for interpretation. So I was asking like if I can use that average growth rates of this average return of this year so far compared to the required, like that.
Average return this year.
So far.
So far this year lah.
Yes.
Okay. For the you can mention something like that, but that is not the important point. The important point is the predicted is the expected growth going forward. That means the one that you say up to this year, this year is like 6 months lah. Okay, let's say 6 months, 7 months already. All right, that is already over. What we are trying to do is to predict expected. Are we expecting the growth rate to be higher going forward for the next 12 months?
Okay. This expectation should be for part 1, right?
Part 1 and part 3. Part 3 also what?
Alright. So it's like split, right? Okay then.
Okay. Right. So for economy analysis, can I just discuss on one factor only? Danny Woon answer is no lah. Okay, one factor is too little. Okay. Nobody will so-called analyze an economy by looking only at one factor lah. Okay, right. So the period of 10 years data, can I use December to December 24, or might I just do a recent months in? Better adjust it to 2025 lah. Okay, right. Lim Wei Yang, sir, for industry analysis, do we just need to write Porter 5 forces, or do we need to include calculation to see the company's life cycle? Porter 5 forces, it's actually, put it that way, it's just the suggestions only for Porter 5 forces. Doesn't mean that you have to do the Porter 5 forces, but of course it's easier lah if you put it that way. But if you put it that way, to answer your question, no, you need to write more on top of the Porter 5 sources. Okay, all right. Part 3. Apa itu? Sorry, misclick pula. Apa lagi ada? Wait. So how if my dividend and EPS is very inconsistent? How I estimate my next year EPS? Okay. Take an average lah. I think most of the company is not consistent one lah. You just have to take an average, okay, and then combine it with the industry analysis and come up with a number, okay. Next one, may I know for the economic analysis, should I include something about the future things like forecast of the economy indicator or how? Economic analysis, in a way, yes, we are trying to estimate the future. Okay, because the whole thing about this report is about predicting the stock price. Right? Predicting means about future. So Lim Qian Yi, yes, wait not Lim Qian Yi pula. Chi Sui Hui, okay, all right. So yes, it's more on the future. Okay, Lim Qian Yi. So for industry analysis, can I write each SWOT with only one point or explanation? It depends. It depends. Okay. If the point is good point, why not? All right. Okay. It's not about quantity. It's about quality. Chong Wei Jun, for the intrinsic value part, can we put the calculation tables as images inside the content instead of typing it up because of the word? No, cannot. Cannot, please, don't put an image. Because in the past, I've seen students actually, the whole document is an image. Okay, don't do that. Because the table is just table. You just use an Excel and then, type it quite easy one. Excel type already, you just copy the table, paste, got it. Okay, right? And then New Jun, may I know about the economics? We need to draw the GDP growth in the future by forecasting the growth? We are trying to get the GDP growth for at least 1 year. You don't need to, you can just search, and there are a lot of economists giving you the growth rate one. You don't have to do it yourself one. Okay. For the debt level of company, should I use DE ratio or leverage or ROA? ROA is written. A debt level you can use leverage lah. Okay, since our ratios mentioned. The one that I mentioned is the DuPont formula lah. The debt times the margin to get the ROA lah. Okay. But if you're talking about the debt level, you just use the leverage lah. Okay, use the DE will do lo. Next one, Li Dao Yi. For the company analysis, how many years of revenue, debt, and others we should compare between competitors? There's no answer to that, but usually you can just draw a table. Okay, you don't need to calculate every single thing on. Okay. Maybe look at the last 5 years. Okay. Can you please show a simple example calculations of industry analysis? Industry analysis, where got calculation one? Okay. Industry analysis, no calculations one. All right. You're just looking at you're just analyzing the industry lah. So it's more qualitative lah. There's not much calculations there. So, okay, if inside the table, is it included in the words count? I think they will count it lah. I think they will count it. Yeah. Okay. But GDP growth forecast from the internet included the COVID period where you need to exclude the pandemic. Then you just adjust it. Yeah. New judgment. You can just exclude it yourself and then just make a note there saying that, okay, adjusted for that, then the average will be what? Just do a simple calculation. I'm sure you know how to do that. Okay. Any other thing? For the calculation of the ROA, ROE, can I just make a summary table, results only in the content, but the content? Yeah, yes, please. Yeah. Hua Yingzhi, yes. Do not show detailed calculation in the report. That will save you a lot of space. Okay. Detailed calculation, you can actually, if it's complicated, you put it in the Excel lah. Okay, together with your whatever calculations there, and then or you can just put it in the appendix. All right. But usually the best thing is to show the summary, the results only, in the table format in the report. Okay. When we read the report, we don't like to flip the report. Put it that way. So don't say, oh, refer to the appendix 1. I flip there, come back, flip here, flip there. Especially soft copy, damn difficult to flip. Okay, so easiest way, you just put it in a simple table. That will do. Okay, Hua Yingzhi and everybody else. For ratio analysis, how in depth do we need to go? I look at the asset change for debt ratio and the specific asset that increase and explain why. Okay. I can't answer the question how in depth. If you ask me, I say as in depth as possible. That's all I can say. Okay. Try your best to go as in depth as possible. That's the answer that I can give you. Right. If the intrinsic value of the stock is too high lah, okay, compared to what should I do? Something must be wrong with your intrinsic value calculations. So the calculation, like I say, is not a maths question. Look at the input into the calculation and see where you can adjust. Right? For economic analysis, is it about determining the future economic and how it can affect the industry? Yes, that's right. What's the opportunity? Yeah, that's right. Yeah, Lim Wei Yang. That's what you are supposed to do. Okay, goes in where for the appendix we should put inside the report or after the report. Put the appendix is always after the report. What do you mean? It's together with the report, but at the end after the report lah. Okay, I don't. Okay. So for part 1, what should I analyze? Is it which stocks better or risk averse? Okay. Not really lah. The part 1, right? Basically, what you are trying to do is to compute that and see, okay, individually what will happen, and then if you combine them to the portfolio, what will happen lah. Basically, what I refer back to the tutorial. I can't remember exact tutorial. Is that tutorial 3? About portfolio. I think a lot of the thing in that tutorial where we talk about, combining tutorial, then the standard deviation will become lower and this kind of things. The answer is there lah, and see whether it whatever that you calculate, it's so-called support what we discussed in the tutorial. Okay, that's part 1 lah. Part 1. So for the calculation, we take the figure from the financial statements. Do we need to label all the figures where we get the annual reports, or we just put in the appendix? No, the calculation is just put in the appendix. Okay. Don't put too many labels in the actual report. The report becomes very, very messy and very difficult to read. Okay. So like I say, in the content of the report, just put a table there. Okay, summarize the results, okay, and then just put there the detailed calculation is in the appendix. All right. Okay, anything else?
Sir.
Yep.
So for the intrinsic values calculations, so when we try to estimate the average growth, we also need to take in the considerations of with our economic analysis and
Yes.
the industrial analysis.
That's
so
right.
For example, it's like the calculation shows me the average growth rate is like 10%, but from my economic analysis and industrial analysis, meaning maybe the company not really have good performance in the future, might not have good performance in the future, or the economy might not be good in the future. So I just try to lower down the growth rate.
Exactly.
So at the end of the conclusion, I just based on the stock price and then compare whether it's overvalued, undervalued, and then suggest the investor whether to buy, hold, or sell.
That's right.
Okay, all right, thank you, sir.
Okay. Right. For example, we use total assets. Do we need to screenshot figure the annual report and put in the appendix? Yes. Just screenshot that part only. Don't go and include the whole annual report. Okay. Okay. What else? All okay? Okay, I will share the tutorial 7, the one that I did just now for the technical analysis, because that thing may still come out in the exam, just for information. Anyway, if you still have any other question, it's better to ask now. We still have like 10 minutes or so. Okay. At 3 o'clock, I have another class some more. Okay. All right. And then after that, you can basically ask me. Still got time Thursday or Friday. Okay. Right. If there's anything. Wait. There's one more. Wong Song Jie. For part 3, the R is from the portfolio beta from part 1, so we need to explain. Please separate all the element from the capital. The R is from the portfolio beta. Yeah, correct. Wong Song Jie, that's correct. Need to separate all the element from the cap M formula, right? Yeah, that's right. Okay. Chen Bingjong, sir, the due date is week 10, Friday, right? Week 10. This coming week is week what? Week 10, right? Or week 9?
Yes, should be week 10.
Week 10, okay lah. This coming Friday lah. Yeah, Friday night. Yeah. Okay. Pang Wei Hao. But the decimal that I calculate, what the decimal? It's not same as the annual report. Then use the annual report. Slight difference, don't worry lah. Slight difference, don't worry. Okay, nobody cares on Pang Wei Hao. Okay. You can just slight differences is okay. No worry. Unless it's very, very big difference. Okay. Right. Anything else?
I think I have a small question to clarify.
Yeah.
No. I want to ask for company analysis is largely ratio. Then like the industry life cycle one, that one is for the industry analysis, right? I just needed
Yes.
to clarify.
Yes, that's right.
All right, to avoid confusion.
Okay.
Then do we need a conclusion at the end of part 2, or do we like just take a full conclusion after part 3? Like
Take a full conclusion.
okay.
Since I mentioned the economic analysis should be included in the future things, then meaning that everything relates to the current year, I not need. No, the thing is, you see, again, when you are trying to predict the future, one of the thing is you based on the past, so you cannot say you don't include anything about current year. It's because you're basing on the current year to predict the future, what? So otherwise the future just appear suddenly, man. Cannot, okay? So to answer your question, you have to include the last few years and use the last few years to include to predict the future. Okay? Chi Xuet Hui. Don't mistaken that. You need the past to predict the future. Anything else?
I think that's all from my side. But if we have questions after this session, should we ask in the Google Classroom or email?
If possible, ask during class lah. That'll be
No,
easier.
No,
Okay.
I mean, like, cause now we don't have so much time, and I might
Ah.
have questions after
Ah.
this class.
Ah.
Like,
If
yeah.
if short question I can answer. Otherwise, you can see that we are actually discussing. Okay, it would be quite difficult to discuss. Like if short answer yes lah, you can try lah.
Okay, but alright then.
Okay. Yeah, Jifei, how come you're still every time you keep asking the same question, one? How many years for economy analysis? There's no answer lah. But if you really want an answer, if you really want an answer, okay, 5 to 10 years lah. Okay, right? That's all I can say lah. Okay. Do we need the introduction for the assignment? No need lah. Just go straight to the point. Okay. All right. I think that's all. Suddenly got the debt analysis of the company. I use financial ratio compared to the debt to equity ratios at the asset turnover ratio for above. One compare 3 years of financial should be only compare 1 year. If compare 3 years of financial ratio, a bit weird. If you think 3 years is a bit weird, okay, why weird? I don't understand why weird. Okay, because based on what we have studied in a tutorial, remember we say we compare to competitor. We also compare to our own past history. So you have to do that. Okay. Since part 1 is use 10 years data, when it comes to part 3, you're supposed to take back 10 years. The growth rate I mentioned many times, Wong Song Ye, it is the growth rate for the future. You can see the screenshot that I'm still sharing right now. It's the average growth for the next few years. How many years you want to use the data is up to you, but the important thing is what is going to be the growth rate for the foreseeable future. Okay. How many percent we can exceed what limit? 0. Okay. I don't exceed, put it that way. Okay, right. Li Dao Yi, so financial ratio we compare to competitor just 1 year. Okay. You see, financial ratio, this is yourself. Wait. This is you, this is competitor. Okay, all right. So let's say 1 year, 2 years, 3 years, 4 years. Okay, let's say. All right. Sorry. Okay, all right. So this is your number. Mana sudah pergi? Where did I put? This is your number. This is your competitor number. Okay, all right. So this is the current year. Okay. Why is it so difficult? If you just put it here and you want to compare, okay, for the past few years, have you been increasing? Have the competitor been performing? Okay, we're talking about a trend, Okay, we are not comparing. In year 1, this one is higher than this. In year 2, this one is lower than this. In year 3, that is not comparing. I mean, that is just reporting what I can see. what I want to see is that, okay, a full picture lah, okay, of how do you think overall? Are we getting better or are we getting worse? So are we getting better or not? That means you come, okay, it's just one word only one. Okay, so if you look at it, okay, over the years we have been getting better, except year 3. Hey, one sentence gao ma. It's not okay. So I'm not asking you to. In year 1, this one is this one is that. Okay, year 2 is this. That one I can see lah. Okay, I just want your opinion on if you put in there and you compare overall, is it better or is it getting worse? Okay, so don't keep worrying about how many years I need to compare. Do I need to compare every year or do I need to compare every 10 years? No lah. At the end, it's still 2 sentences kind of conclusion that you need to form. That's all. So just do a table and that's it. Okay? Right? So, Lee Dawi, do I answer your question? Okay? Right. So that is the important thing that we are trying to do. Okay? It's not that, oh, this one compare, or this one is higher than this by 1, this one is lower. Don't do that, please. That one, you will get minus mark 1. Okay? Okay, I think the time's up. Yeah, if there's any question that can be answered in a short thing, then you put it in the Google Classroom. I'll try to answer that. Okay, otherwise, you just have to, for discussion kind of questions, and ask in class lah. Okay, all right. So, but I think most of the things you can do already lah. Okay, if there's anything, I think there will be just some fine tuning only. That should be okay. All right. Okay, I have another class, so I will see you all in class this Thursday and Friday. Okay. All right, that's all. So, all right, bye.
Thank you.
Okay.
Thank you.
Bye.
Bye-bye.
Bye.
Thank you, teacher.
Okay, thank you. Bye.
Thank you, sir.
Thank you.